Good evening, option traders. It's Tuesday evening, November 26th, and you might be wondering, why the heck is he doing a video tonight? It's not Wednesday night. Well, tomorrow's going to be a very, very quiet day, and if I did the video tomorrow night, then we've got a holiday on Thursday. We have an abbreviated session on Friday. So I thought, I'm going to try and get a video out now so that we can take advantage of some trades, maybe get some time decay working for us. This is a time to lay low. Should be relatively quiet right now. Only have a few trades on, so I'm not going to load you up with a bunch of trades this week. Only a couple, and those are the same instructions that I gave you last week. We're milking all of our bullish put spreads last week. We had an SPY position. We exited those towards the end of last week. Did well for us, so now we're on the sidelines waiting for our next opportunity. So you can see here that the market is grinding higher. We've got this nice upward sloping trend line. 310 is our first level of support. We want the market to stay above that if we're doing bullish put spreads. If we're selling out of the money bearish call spreads, we need this momentum to slow down. We need the market to kind of roll over here. We started to see some signs of it last week. I personally thought that Trump would sign the bill supporting Hong Kong protesters. He did not. The market viewed that as very bullish because it means that Trump probably cares a little bit more about a U.S.-China trade truce than he does about signing a bill supporting the protesters. I think that with every passing day, the Democrats are going to use this as a weapon against Trump. Republicans and Democrats supported that bill, so I personally hope he doesn't wait too long to get on board. When he does, China's already promised that they're going to retaliate, and there's going to be backlash. Who knows? The whole trade truce might fall apart if that happens. We'll see. I don't think the U.S.-China trade truce is any big deal anyway. USMCA, that's a big deal. Nancy Pelosi said that they're ready to sign it. They're going to be working towards getting that signed by the end of the year. We do 4 times as much trade with Mexico and Canada as we do with China. We do twice as much trade with Canada and Mexico as we do with the EU. I'm talking about U.S. exports. So USMCA, very, very important. And that could be the news that is really fueling this rally, not a U.S.-China trade truce, which is all we really hear about. So we have to stay mildly bullish. We should also have a couple of bearish call spreads in there as well. So I'm going to go through my searches and show you what we've got this week. If you're watching this video on YouTube, please subscribe to my channel. I post this video about 3 days after the fact. You'll be able to go through, take a look at how these picks have performed over the course of the last 3 days. I think you'll be very impressed. Go back and watch the videos week after week after week, and you'll be able to see the consistency because I start each video off with a review of the prior week's picks. For those of you who are subscribers, you might notice some changes on the website. Ta-da! There's the new website. I hope you like it. Nail the market, find the best stocks, apply leverage. That's what we do. So, let's take a look at last week's picks, see how they fared. Now, last week I think I was telling you that we want to have a bearish bias, neutral to slightly bearish. So we're going to take a look at the bullish stocks first. We're going to go into November 20 bull and see how those did. CLDR, very good. DISCA, really nice. In fact, that one I said, I think you should just outright buy this one. That was a nice long. Didn't have liquid options. Netflix, very nice, holding that 100-day moving average. Very good bullish put spread. Pizza, off of this support level right here, this breakout, that's actually done well. SQ, really nice move higher. Now it's through the 200-day moving average. Now it actually looks like it could be interesting on that 200-day moving average, trying to get into this gap right here. So I do like SQ. It's not one of the stocks I'm going to highlight. Already did it last week, but I like it. TW, this is the kind of move that I like. Nice grind higher. You can see it distancing itself from that 100-day moving average. Very nice. VXX, I am long VXX. I'm looking for Trump to sign that bill in the next 2 or 3 days. I think bullish speculators are going to get flushed out. I think the sentiment's a little bit too hot right now. We're due for a nasty day or two. So I am still long VXX. I don't feel that it's got that much more downside to go. We'll see. All it's going to take is one nasty day for this thing to pop. And it could be the backlash from China. At least those are my expectations. ZG, very nice. You can see it holding the 100-day moving average. That was the idea. You could sell that put spread below the 200-day moving average. Nice. So we had all winners on the bullish side, and you would kind of expect that because the market did rally. I don't think we fared as well on the bearish side. And let's take a look. BABA, no way. BABA, so we sold that bearish call spread if we did it here and used that breakout as the stop. Well, you had to stop out there, not here. So that was a loser. BBY needed to hold that 200-day moving average. We ducked below it. Now we're shot back through it. We had some pretty good retail earnings. Best Buy just today and a number of other stocks as well. So the retail sector has been rallying pretty well. Caterpillar getting a bounce now that it seems like the U.S.-China trade truce might happen. Here we needed that breakout right there not to hold. This you probably would not have even been doing a trade on, quite honestly. We needed to fall below that breakout. We never did. So you should not have been in that trade because that would have been what we were using for our stop. DAL was below that 200-day moving average. Once it closed above the 200-day moving average right there, you should be out. Keep your losses very small. FedEx, nice downtrend, didn't hold, broke through yesterday. Again, another cyclical stock. Hog comes down below the 200-day moving average, bounces, that would have been a stop. LVS never got below the 200-day moving average or the horizontal support level. Should not have done that trade. So we had a couple that you shouldn't have done, and then we would have had 4 losers. Gosh, I can't stress this enough. If I weren't required to do a video tonight, I would not do a video tonight. I would tell you to enjoy your Thanksgiving with your family, take some time off, don't put any new positions on, relax and enjoy. But I can't do that. I have to show you some trades. So I'm going to try not to trade. It's okay to be on the sidelines. Believe me, when the shit hits the fan and we do get a market pullback and you've sold a bunch of bullish put spreads right below the market, really close to the in the money strike price, all it's going to take is one little whiff and you're going to be scrambling to reel these things back in instead of viewing it as the opportunity that it is and looking for new trades that you can initiate on that pullback. So I've given you my word of caution. I'm going to give you a few trades this week. They're very easy to find. Almost everything looks bullish, 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 coming up roses here. So we're going to click on custom search and I'm going to run some searches. Let's start with the bearish search right here because I've got it loaded. We're looking for good option liquidity. We're looking for relative weakness on a 1 hour, 2 hour, 2 hour, 4 hour, and 1 day basis. And we're looking for a buy signal. So buy signal across those time frames and relative, we're starting on the bearish side. We're looking for a sell signal across these time frames, 2 hour, 4 hour, and daily, and we're looking for relative weakness, 2 hour, 4 hour, daily. Click scan. These are our candidates. So I've already gone through these charts, and out of them, this is my favorite. Tesla looks weak to me. I'm going to move this off screen. Let's take a look at Tesla. So you have the stock in this really nice uptrend. Very, very powerful move. Big gap up after announcing earnings here. Stock runs up. Got an inverted hammer here. Not a great sign. And then a nice drop. Well, the market's been moving higher and higher, and the stock is weak relative to the market. We'll put up the 1OSI indicator, and you can see the relative weakness. The orange line is below 0, and you can see that the volume here the last 3 days has been good. What's the price action been? Down, down, down. So there's your breakout right there. Stock is testing that breakout. Sell that bearish call spread using that 345 strike price, and you do not want the stock to close above that, or it will fill in that gap. So I did take a look, and if you went out to the December 13th date, you could sell the 345, 347.50 bearish call spread for a 50-cent credit. So there's a $2.50 difference in the strike price. You're bringing in a 50-cent credit that represents a 25% return in the next 2 weeks. Now, to make that kind of money, you're going to be taking a fair amount of risk on. So nice return, 25% in 2 weeks. This is a stock that moves. That is the price point that you want to lean on. So there's your bearish pick for the week. I did like BP. That was also on the list. I'm going to move the custom scanner back into view, and you can see BP right here. So we'll take a look at that, and you can see how the stock has been in a steady downtrend here. It's multiple resistance right here, never gets to the 200-day moving average, backing off steadily, lots of red candles in here. Now it's breaking below the 100-day moving average. You can't get much of a credit here, and you'd want to go up to the 39 strike at least. And I looked at that, I believe December 13th, if you sold the 39.40, or excuse me, 39.50, you might be able to get a dime for it, but all it's going to take in the stock is a $1 rally. And boop, you're in the money. Not my favorite type of situation. I will certainly day trade this from the short side in the course of the next week or so. If I'm looking for a short, this would certainly line up well. Tesla. Tesla is the one I think you need to trade on the short side. So we're going to go in. Now we're going to flip these all. We're going to go on the bullish side. And let's see what that brings up. All right, these are our bullish candidates. So I went through these, looked through each of them, and I'm looking for, in particular, I'm looking for bottom fishing stocks. Okay, BABA looks really good, and BABA is something that we can trade. Just had another initial public offering on the Hong Kong exchange, so you can see it is really moving well. So this is a very, very nice breakout. This is one that I will day trade from the long side, but I would not be selling a bullish put spread right here. I feel that if the news comes out on China, it could fall back pretty quickly. There's a lot of backlash. So I don't like Chinese stocks right now for bullish put spreads, and I also don't like cyclical stocks for bullish put spreads. Those stocks have done well. They've run up nicely, but those will be the most vulnerable to a trade dispute. Shouldn't say dispute. If the trade truce doesn't go through, those will be the first stocks to pull back. So when I went through the list, I did find a couple that I really liked. One of them is Pepsi. Now it did just dip below this 100-day moving average, and it moves freely above and below the 100-day moving average, so you can't just use that and say that's where I'm going to sell my spread and that's going to be my stop. You really have to go down to these long tails here, which puts you at the 133 strike. That's where I would choose to sell this spread, but not my favorite candidate. But it's a fairly stable stock, so I do like it from that perspective. Starbucks. This one I like a lot better. So here you've got one bottom, two test, three test, starting to form some long tails under body. Stock bounces, comes back, forms a higher low double bottom. So buyers are getting more aggressive. They didn't let it come down and touch this level, and now we're above the 200-day moving average. On this one, the Starbucks December 6th expiration, you could sell the 83 put and buy the 82.50 put. Might be a little bit tough, but you might be able to squeeze a 10-cent credit out of it tomorrow. You got a 50-cent difference in the strike price minus 10 cents. You put up 40 cents to make a dime. That's a 25% return in a little more than a week. It's not a bad one. Starbucks also tends to be a pretty stable stock, so I like it. I think that one works well, and I think it's going to find support here. You got buyers lining up here, and you can see that in the long tails. You've also got the 200-day moving average to lean on. That's why we're using the $83 strike price. Bring up another one that I like. Twitter. This has got a nice little bottom formation. Establish it once, test it twice, a little bit lower, try again, try again. All right, now we've got multiple support forming. We have a breakout through this horizontal resistance level, grinding higher. I like this one. On Twitter, you'd have to go out to December to be able to get down to the $30 strike price. And I think you want to be down here. You want to give yourself a little bit of breathing room in case it pulls back. But $30, it should start to find support because of all these buyers in here. They should start coming in earlier and earlier as the stock starts to lift off of that level. So you can sell the December 13th $30 $29.50 bullish put spread, and there you can get a dime for it. Probably can squeeze out a little bit more for it too. So you've got about 2 weeks, a little more than 2 weeks. I'm not even going to count tomorrow and Friday. This week is pretty much toast already, but you have about 2 weeks that the stock has to tread water down here, even if the market pulls back, and that's why I'm looking for bottom fishers right now. Even if the market pulls back, I think these stocks, given that they've been pounded already, have pretty good support here and have nice upside to them as well. So I really like Twitter, and I like Starbucks for the bullish put spreads. Pepsi could work if it's got a little bit of a pullback to the 100-day moving average. I'll show you another one that I like, but it hasn't spent enough time down here. You've got UAA, Under Armour. You've got this horizontal support level right here. You have one test, almost two tests, three tests. Now we've got a double bottom right here. Stock has been pretty resilient in here. There you'd be looking at selling the $17 put, probably buying the $16.50. So the only reason I don't like it as much is that the stock is starting to put in a low here, but we're still seeing a mix of red and green bars. So that is the a bullish put spread opportunity, but I'm not crazy about this. So I'm going to add these to the list here, and we'll create a new one for next week. And we're going to call this Bull. Nov 26 Bull. All right, so let's add these symbols, and we've got Pepsi. Actually, I'm just going to put in two symbols. We're going to look at Twitter, and we're going to look at Starbucks. Those are picks this week. Then I'm going to go in and create another list, and we're going to call that Nov 26 Bear. And we're going to put one symbol in, Tesla. Now, I don't typically like to do this. I want to give you as many picks as I possibly can, and then I want to give you an overall view of how all those picks did, and to go through the process, the decision-making process on all the different stocks. I think that that's much more informative for you. You can learn a lot more from that instead of me just cherry picking 2 or 3 picks and spoon feeding you. So I'm going to do it this week. We've got a holiday coming up. The trading is going to be extremely, extremely light. So please be prudent. Try and be mainly in cash. Wait for that opportunity to come up, and then we'll be ready to pounce on it. And we should get that opportunity in the next week or so. Again, it won't take much. You get one nasty day, all of a sudden the selling starts to feed on itself as bullish speculators start to get flushed out. And that's how you get that nasty day, and that's how the programs kick in, and You'd be surprised how far the market can pull back. Even though everything looks like it's coming up roses right now, we're due for one of those days. I'd like to wish all of you a very happy Thanksgiving. Spend time with your families. Enjoy the holiday. Don't worry about the market. We're going to have better trading opportunities very, very shortly. This is a low probability trading environment. Trade well. Enjoy the holidays. See you next week.